on with my streaming software. It keeps booting me off of my streams. Okay. Give me a second here. That's not what I wanted to do. I want to make sure that it's working here. Okay, software. It's working there. Good. Whew. Stressful. Stress and anxiety. Give me a moment. I'm just trying to load back up. Loading. Almost there. All right, so you can drop some tickers into the chat. We're going to get this, trying to get this up and running again. I don't know what it is going on with my streaming software, but it keeps sending out errors on my screen, having a problem issuing like just the connection or establishing the connection. Okay, we'll hold that there. Boom. Got my Twitch up. Okay, perfect. Oh, man, so annoying. All right, so I'm going to go over some of the names that are just on my radar that I have little positions in. We just, on the prior video, we talked about the what's going on right now in the market. And now I want to get into some individual names. So let me pull up my Sturf. Okay, there we go. Very nice. All right, so throw out some chats and throw out some stuff. I'm going to refresh the chat. I want to make sure that I have actually the chat coming in. Okay, we're back. Hey, thanks, Notice. I get it, man. All right, so we're getting we are getting some stuff in the chat. So good. I'm glad that it's working. So if you want, post some tickers in there. I'm going to write them down, and I'm going to go over a list of names that I'm currently looking at. Like I said in the prior stream, which was 5 seconds ago before it cut out, is I am focused not much on day trading right now during a contract roll, because you can have a lot of choppy movement. And not only that is it a huge contract roll, but we also have the Fed rate decision coming up right around the corner here too. So I'm looking to just get some feelers out there and add to what works, cut what doesn't, and then go from there. So I have kind of an array of different names that I put out there as far as small positions go. I want to make sure that I see everyone's stuff coming in here. We got Mike is asking for Eli Lilly. We got SMCI. We got these aren't ones I'm just writing down from the chat. LRCX that I'll be going over. We got Siri. We can pull up Lucid, XBI. HBAN, KRE, we'll go over that. We'll go over XLE, Energy, Palantir, cool. Baba Ski. Yeah, Baba was actually setting up. I am interested to see what that looks like. Okay. All right. Keep them coming in the chat. If you're on Twitch chat, Twitter, I don't really see that right now, okay? Just so you know. We got Coin. Yeah, we got some good names coming through now. Oh, we're moving and grooving, people. We're moving and grooving. We got TLT, cool. I did get Baba. Nice. Okay, so I'm going to go over some of the daily charts. I'm assuming that these are all daily that we'll be taking a look at. You have to kind of distinguish otherwise if you want me to pull it up. What's up, Darth? I'm going to go ahead and pull up the daily here. And, I'm just going to do it on Thinkorswim. It's a little bit cleaner for me. A little bit easier to transfer in and out. Okay. So the names that I have small positions in, out with a small loss trading NVIDIA. Meta, yeah, Meta. I actually have a position in Meta, so we'll be talking about that in a moment. Oh, you know what? I don't have a position in Meta anymore. I just sold some of it today, or sold all of it. I'll pull it up. Okay, I put that in the notes. Okay, so here's some of the positions that I have. I'm just starting from the top of the list, no particular order. CME, I have a little position here. Actually, I'm not going to say a little position on all of them. Just understand that every position that I'm going over right now, it's like a 1.5% to 2% position as far as like a feeler goes. And I have like 10-ish of them or so. And they're just feeler positions. Some of them broke out. Some of them haven't already. Some of them have already broke out. Some have not. And the reason here is because if the market likes what the Fed sees, perhaps a lot of these break out. But the ones that don't, I'm just going to get stopped out for a small loss. But if the market does rip, some of these can turn into bigger winners, and I can potentially add to them. So CME Group is bumping its head up here at the prior high. The prior high for the year is that 222.63. And as it stands in this current moment, we're above the 20-day. It's rising. The 200-day is rather flat. The 50-day is increasing. And we just got this little flag pattern right here taking place. So it's down slightly on the day-to-day. It's kind of handling out here, getting tight as far as the price action goes. So I have a small position there with a stop would probably be just under this prior swing low. I believe it's at right at around here. Maybe it was a little bit lower when I set it, but right around there with just the 2% position. So that's CME. We got a lot to go over. Target, I took some profits on already. Target, I was originally looking at the idea more over here, but after this pretty, continued sell-off and we created this candle, I played it right from this on this day. I played the breakout of it or the breakout of the high, and I held it, and I just sold some of the position today. So this was actually more of like a 4 to 5% position, and now I'm down to like a 1.5 to 2% position in Target, which is not like a crazy high beta name, but I did lock in profits there, and I'm gonna just see where it goes. I'll probably update my stop from down here to more maybe this low. I'm giving it a little bit of space. But I haven't fully decided that yet. H&R Block, I did just recently enter on the prior trading day. Not this last, no, it was this day actually. 16, did I enter 16th? I'll have to double check. Yeah, it was the 16th, and I think it was as we basically, just a little bit after the opening bell, just slightly above the high of this prior day's candle. So I'm in the green here, small position, but the idea behind this is it's bullish context. We had this, earnings gap up, price consolidated for a while. It's been on my radar. I've been looking for some sort of a breakout. I'm trialing it out here with a stop under here and seeing how that goes. Right now we have an inside trading day right now. So if the market does like, what goes on tomorrow, perhaps we see a little pop up, maybe to this prior swing high. So that's H&R Block. One of the utilities that I have on right now is Southern Company. Southern Company is just flagging out here. I have, once again, about a 2% position here. And I'm just looking for a potential breakout continuation with a stop down under that 20-day moving average for basically a close underneath that level. See how price does after all these reports. So there's Southern Company, TJX. This one was a little bit bigger of a position, and I did peel profits already on yesterday's candle. And this one I was looking for the breakouts. So when we got above the high of this day, I entered into my position. It was around a 4% position. It wasn't even a full size. And then on this day, I took some out on the morning gap up. Now it is back to and around a 2% position. So I peeled a little profits just on this little pop up. And now it's still in bullish context, right? I still like how it looks, but I want to reduce I want to take some profits as we're moving into kind of this binary event, right? I don't know what's going to happen, and I'd prefer to just lock in some profits, keep my positions small, let the market do its thing, digest, and then come back at it strong if the market lets me do so. If it doesn't let me do so, then I'm just going to kind of see if I just get stopped out across the board. And if I get stopped out across the board on, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. I got 14 positions, that are anywhere between 1.5 to 2%. Let's just call it 2%, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So yeah, I'm talking like 30% exposure or so in the markets. Not that much. I don't really have much exposure. And if the trades work out better, I'm going to start adding to the winners, and then I'll just cut the losers. So the losers are going to be small, and then the winners can grow in size over the course of time if it allows me to do so. So TJX, I'm letting go. As it stands right now, I locked in those profits. The stop is down here. I'll probably update it to this prior swing low, or I'll go into the 15-minute time frame and look for like a swing low or something like that. TCOM. TCOM is also an early entry. I entered in yesterday. I think I'm down a little bit on this position as we were starting to break out over here. So I think I'm down slightly on the position. But I do like how the price action is kind of coiling up here, right? And it was after the earnings, right? So earnings came out. What happened here? So earnings came out. We saw some continuation. We're digesting the move right here. So my stop loss is probably going to be just under this swing low there and see what price wants to do. I'm looking for a breakout of this type pattern to continue. And if it is the case, maybe I'll add to it. But overall, the trend is not, horrible, but you can see that the 50-day is sloping down still. The 200-day, the larger time frame, is sloping up, and the 20-day is sloping up. So TCOM is another one. XLEXEL. This one was seeing some nice movement from. I haven't taken any profits here. I may today. It just hit a new high for the year. But I played this on the 16th, the prior trading day. We broke out of this little swing high pivot area, and I just I put a stop loss here, but I'll probably be updating that to the low of this day, this breakout candle, and we're seeing a nice little pop from this this breakout, which is up about 3% or so far, which is a nice little pop. Speaking of that, so I got to make a little note because I may just take just a few bucks off, just lock in some of the profits. And then try to add if we get add more tomorrow if it likes what the market sees as far as the Fed interest rate decision and so forth. Zoom video. This one was interesting to me, and I like this one, so I'm not touching it. I have just like all of them about a 2% position. I kind of want to grab more, but I'm gonna just wait it out. But yeah, we had earnings move. We saw a nice big kind of follow through on earnings. And then this consolidation lasted 1, 2, 3, 4, 5, 6, 7, 8, 9 plus days, okay, or so before seeing that green candle. But the pullback was like, okay, it was just basically like coming off like pretty softly. It wasn't aggressive. And the volume on the pullback was not aggressive either. So this to me looks like an ideal flag, right? An ideal bull flag. So I entered in, I think I entered in, I can't remember if I entered in this day or that, but I have a little line here, so maybe I entered right here with a stop right here and then a play up to up here or more if we have a full measured move. But I like the look of this. Now, as it goes higher and we trade above the 200-day, it is still flat to potentially start rising, the 20-day sloping, the 50-day sloping, but the bigger trend right here is kind of flat to neutral. So it's not like the trend, like the long-term trend is like got my back here by any means, but it may in the near future if I'm not stopped out. So there's Zoom video. LINE, no, I didn't get stopped out of this one. I thought I got stopped out. I did not. So Line is just a recent IPO. It's an energy name. I just saw this kind of tight consolidation here and kind of this, channel, this flag. So I'm looking to see if we do break out further. I think I'm down a little bit on this position, and I had a stop at the low over here. So we'll see what this brings if we can get back above this 20-day. It doesn't look amazing, but it could very well look pretty good if we start breaking above $84. And that's kind of the idea right there. So break out of here, stop down here, but I'll probably update that a little bit to play more up towards the north, which is about, a 2-for-1 risk reward, potentially even higher. So there's Line, another one that I have a little position in, Beyond, BYON. This one, I took my profits day one that I took this. This was in the trade ideas section. I have not even a 1%, or no, I have probably about a 1% position left. But on this one, I entered in actually on the 12th, 9/12, and I entered just slightly higher. And I like this setup because we had this kind of double bottom right here, this little double bottom. We had a positive divergence in the RSI. Beyond had some news. Marcus Lemonis, I think, reported something. And we had this big green day right here with a lot of volume. And you can see pockets of volume right here, right here, right here. And this could potentially be institutional type volume, as we're seeing just big bars there and big green days. And then the market started kind of just digesting that price action into and around this 1066. So my thought was, okay, I'm going to take a little stab here, 2.5% position, because it does look like it's setting up for a pop. And, that played up, boom, like the very next day we were up, like 13%. I was up 13% on my position, so I must have gotten in a little bit lower. And as soon as that happened, I was like, yeah, I'm not going to let this turn into a loser. So I cut my position dramatically right then and there because it was a great move. It was a great move. And then since that point, price action has been coming back down. Now, this isn't down and out yet. This could still be just digesting this recent day. And the structure of the double bottom is still potentially in play to play up higher. It's just I'm not really willing to add yet after just clipping a 13% profit. Perhaps if we get a little bit more, consolidation and the 50-day starts to flatten out here, that I would be looking to potentially now then trade back up for maybe potentially a little bit higher of a pop. But the overall trend of this chart, why I'm a little bit more aggressive on profit taking, is because the trend sucks. It's well below the 200-day, the 50-day sloping down, the 20-day, right, the shorter term, it's flat. And that's about it on Beyond, right? So when we're in a bad trend, I'm typically a little bit more aggressive. Right? Mobileye was one that I traded. I'm already out of that position today. But Mobileye, right? There's been many times where Mobileye, should I buy this dip? Should I buy this dip? I'm going to add here. I'm going to add here. I'm going to add here. And it, honestly, if you're not very aggressive as far as taking your stops and just moving away, you're going to get chopped to smithereens in moves like this. And down here, right down over here in this range, I think it was 912 that I entered in the position. Basically, we saw big volume coming into the downside, and then we had this little inside trading day right here. And I was like, okay, you know what? I'm just going to enter in about a 1% position. So it was really small given the context of everything. And I'm going to see where it goes. And I got lucky, right? I caught a bounce up. It was basically, well, how much was this? I probably ran around there. Yeah, about 13 to 14%, this little tiny pop. And only on 1% of my portfolio. So it's not crazy or anything, but yeah, I'm out of that position. I don't care if it goes up higher. It's in a horrible trend. So if it wants to go higher, I'll wait for it to set up. So that's Mobileye. I have no position. I had a position. I'm out. The reason why I'm telling you that is because that was in my screenshot yesterday in the Discord, and it's no longer in my possession. Okay. There's Mobileye. Let me see. Where was I? Beyond ROIV. ROIV is a biotech name. So I traded this breakout at 12 and I took profits of it as we were reaching back into this prior high right in around this area. And I was looking to gain back exposure into it. And yesterday I entered back in. And the reason why is because we were pulling back into a prior breakout area and we started to see strength. So I'm up a little bit in this position here as of 20 days, above the 50, above the 200. And this could very well be a back test. Potentially, if we look at the weekly time frame, we're back testing this breakout area. Now, it could turn into what we saw over here, but we've been seeing higher lows build up into this pivot of 12. I can go back further. It's over here too as well. A large cup with handle. I don't want to read into that one too much. But yeah, I like ROIV, and I'm just going to have a stop under here. So if I'm stopped out, it is what it is. But if we do get some strength after this breakout back test, hey, that could lead into something pretty good. I mean, I can go back through history and show you this chart, AT&T, and if you were in the Discord, even if not, I talked about this on a not even on a live stream, on a stock market brief show, as we were back testing this breakout area, and it was flagging, it was pulling back, right? It was pulling back into this back test area, and you want to see if we see strength. We started to see consolidation and so forth. And it was just a nice consolidation pullback after seeing massive volume, right? You see massive volume on the breakout. You see kind of just this, consolidation, this little pullback, and you look back and you're like, wow, holy moly, that thing moved like crazy. And yeah, it did. So this was, I didn't trade it all the way up to here, but, there's times where I saw this flagging out again over here. I think I traded it more up into this range. And then I think it was back on my radar over here, but I didn't trade it. as we were building these higher lows into this kind of pivot area. Okay. Now, if you take on, smaller positions, you can hold through some of this volatility as we're still in above a rising, 50-day, 200-day, and so forth. Okay, I don't have a position there. Let's go on. EAT, this is EAT, consumer staple. Heck yeah, dude, it's breaking out today, actually. I like this one. I like this one quite a bit. As we were breaking this trend here, we were above the rising 200-day. The 50-day was flattening out, but the 200-day was sloping up, and we're just consolidating right here. And you can see that we're breaking through that pivot. I entered in yesterday as we were breaking through, and then it came back in. But now we're getting some continuation. So we'll see if we can get some more continuation and maybe go retest these highs potentially higher and get this trend really cooking. Get it really cooking. Get eat to cook. Yeah, I'm hilarious. Okay, so yeah, I got a position there. I'm liking this one so far. EVH. Bummer. Okay, so EVH was looking good this morning. It faded. But EVH is kind of a healthcare name. So I'm showing you stuff kind of from across all around the board here. This one was looking good this morning. It's not looking all that great now, but it was a nice move this morning. I entered in yesterday on the inside trading day as just I think this one was one that was less with a stop down here. It was just this nice earnings move. We got follow through, price consolidated. And I was looking for a potential flag breakout to these highs. And we might get it still, but we're kind of squatting back down. So if I go into the 15-minute time frame, we are above that rising 5-day moving average. It's pulling in a little bit. Maybe it picks itself, maybe it picks its head back up. But I don't like when we see a nice move and then it gets faded like that. It's kind of annoying, but my stop's down here, so you'll know if I get stopped out or not. And if I update my stop, it'd be higher. So if we do come down here, you can basically bet your dollar that I'll be stopped out. Nah, let me put that back. Okay, Tesla. Tesla, I still have a position in, and Tesla was entered in yesterday on this red day. And the thought process here on Tesla was that I wanted some exposure to these higher beta, higher market cap names. I don't want just, and I also did Meta at that same time too. Which is, what does Meta fall under? XLY, consumer discretionary? I don't even know. I have to pull it up. I think it's in there, but actually I'll pull it up right now. Actually, no, it doesn't matter. I'll pull a Meta when I pull up the chart. But my thought process here is if Tesla wants to get rocking and rolling, I just want a little bit of a position. You can see that we had support here, basically at open. It's support here. We had resistance, and now we're back up at this level. So this level right here is quite important, apparently, to the market, and that's roughly at 235. We're just going to round it. And if we do want to break through this, maybe we do come to fill this gap up here, which is, $15 or so higher, potentially maybe even higher, and that would be nice, right? We see these higher lows building into it. And, I want to be a part of it if it breaks out. But if it breaks down, my stop is just under the low of the trading day that I entered. And once again, it's a smaller position, but I do want to be a part of it if we do see the breakout. And if we break down, I don't really care. Obviously, I don't care on any of these names if it breaks down, to be quite honest, just so you know. I'd care if I was oversized in my position and I wasn't paying attention to that. But that's not the case. Those are the names that I have. Meta was one that I exited out of in the morning. Where is it at now? It's at the lows of the day, so I'm happy I exited when I did. It was probably right around this area. I'd have to look at the timestamp of it. But right now, we're above that rising 5-day. We're just kind of consolidating as we're leading into this market data. So this thing might still have room to run, but I entered in this day early on, right? And that was a pretty that was a pretty large move in a very short period of time, almost 4%. And I was just like, you know what? We ran into supply here. We ran into supply here. Now we're going into the Fed day. I'm just going to cut this position because I have quite a bit of positions on right now, and I just don't care about having that risk on. If it breaks out, consolidates, I can always re-enter, and that is kind of what I'm looking at now. Those are the names that are on that I legitimately have on right now. That was from a screenshot. I'll show you the screenshot just so you know what I'm showing or know what I'm talking about. So this is the screenshot. Those are the names. If you want to screenshot it, you can, and you can look at those names and just understand that, one, if you're like, oh, okay, he's in it, I'm going to enter it. You can take the same trades as me, okay? at any given point. I can even give you my exact entries and exits, but if your position sizing is different than mine, the outcome is always going to be different, okay? If your position sizing is different, it doesn't matter how good of a trader you are. You can have one trade that's oversized and it could wreck you, okay? So understand that it's not as important as the stocks that I'm picking, but what's more important here, which goes over the head of many people, is how I entered it, the position sizing that I'm taking, and then what I'm doing to manage the trade. I'm actually looking to add into the ones that work out good, and I'm looking to cut very quickly the ones that are not doing good at all. Cool? Okay. Let's look at some of the names that y'all want to look at. But before we do, I just want to look and check at the market, see what's going on here. The last time we talked about it was just earlier today, and we said basically I'm not trusting this market too much. Is bullish divergence. We lost a little convergence, but it was bullish back when we were talking about it. And we were up at that daily expected move. And I'd said, basically, I'd look to go long here in this context if it sets up, but we've already tagged the daily expected move. And I'm just not interested during a contract roll to be day trading too heavily, too aggressively. And then on top of that, we have a big decision tomorrow. So the market's going to probably chop around and digest whenever this takes place, okay? Okay. So S&P 500 as it stands right now, we're just doodling around, all right? We gapped and we're camping, okay? We gapped and camped. We're within the daily expected move. Market net flow still is bullish, but the cumulative net premiums for puts has been climbing too with it, which is causing us to lose convergence and chop around a little bit. As far as gamma levels go, 5,700 is still that main level to pay close attention to. If the market wants to rip, man, that would be the level that we go to. Other than that, beneath us would be that 5,650, and that's also a pretty big gamma exposure level. Below that would be 5,600. So and then gamma flip levels at 5,580. So I'm looking. I'm a buyer above 5,600. I'd be looking for setups. I'd be adding exposure above 5,600. But below 5,600 and below the gamma flip line, I'd be probably taking a pause there, but I'll dive into that a little bit more. But the reason why, once again, more specifically, is because if you look past 5,600 level right here, which is kind of shrinking in size, there's not much going on beneath that, for 50 points below to 100 points below. Okay, so if we can hold 5,600, which we are right now, the main level of the watch is at 5,650, and then above that would be that 5,700. The main call wall is up here. I don't think we're going to be getting there unless if the market really likes what happens tomorrow. But those would be the key strikes in the S&P 500, and yeah, they do very well matter in the context of these markets. Okay, if we look at 0 date, let's see if anything's changed from this perspective. 5,650 is the call wall. You have some exposure at 5,675. This looks like just a pin right around 5,600 to 5,675, which is this kind of zone here, right here. Kind of just feels like a pin. So if we do come down at 5,650 and this market structure looks fine, I might look to actually try to trade it back up and just see if this is a choppy day and we just range back up. Other than that, I mean, if you go long, maybe back to 5,675. I'd rather just sit on my hands in that context, right? It just doesn't look like, oh yeah, it's like a great setup. If I'm trading at all, it'd have to be A+, and this ain't A+ to me. This is C- type of territory, right? You'd be fighting tapes. And you probably see that in the 1 minute time frame too. Let me see. Let's go to SPY and go to the 1 minute time frame just to see what the context looks like. Yeah, this looks like crap, right? It looks like crap. Pardon my French, but it does, right? This is the 1 minute opening range. We sold off. We ripped back. We came to back test. We came up. We had a new low, and then no. Like why? Why am I going to waste my time? Look at the Qs. The Qs is under it, and look at this. Look at it. Yeah. Good luck. Good. If you can extract money from this, awesome. But if you're trying that hard, like, why? Why try so hard in this context? I'm not interested in trying hard. I'm interested in keeping it simple and just making easier money. And this, to me, looks like it's hard money to extract from the markets. Not for everybody. Some people love this stuff. I don't. To each their own. To each their own. Okay. Checking in on the chats here. How we all doing? Here we go. Let me check. Quite a bit of stuff came into the chat. We got a lot of these names written down. Somebody had mentioned PayPal, so I'm going to write that one down. Give me a moment here. PayPal. I do have TLT down. Let me check into Twitchies. Hey, what's up, EJ? Keep it simple. Yeah, Milkman knows. Hey, what's up, FT Trader? Good to see you in here, man. Hey, no hard feelings about the message that you sent me, by the way. I totally understand where you're coming from on all that stuff, dude. Makes sense. It makes sense. But I do appreciate all the support that you've been giving, FT. My man. Salesforce and DNA too. I don't know what DNA is, but Salesforce is what? Is that CRM? Right? CRM? I believe it's CRM. Okay. Redfin. Yeah, we can take a look at Redfin. Oh yeah, Redfin saw some massive volume. That'd be interesting to check up on that one. Thank you. Thank you. We do got Meta. I went over that. XLC. Is that where Meta's hiding? Or were you just commenting on the comment that I was mentioning earlier? I was like XLY or XLC, yeah. But we put down XLC. I just entered SPXU, SQQ, TCA, and SOXS. Oh, you getting bearish. You getting bearish. And you might be right. I don't have any shorts on. I don't have anything on. About my short position is just being in some mostly cash. That's like my protection right now. The unfortunate thing for me is I miss out on a lot of moves, but also the positive from not like being too aggressive from like both directions. The positive is, if I was going to be wrong, I'm no longer wrong. My portfolio doesn't move too much. So, whatever. ASTS. Okay, we'll pull that up. Short on 6C. 6C. Is that currency? Canadian dollar? Is that what you're talking about? I don't really trade Forex. God, I just don't understand all the leverage behind this stuff yet. I don't know if I want to learn it, to be honest. If I want to learn that. S&P 500 at new all-time highs. Hallelujah. People, if you want to know what the measured move is for the S&P 500, I shared that on Twitter and also on last night's market brief. I'll pull it up right now, but the measured move is basically up to 620. 620 would be a measured move on the S&P 500. Why did I get 620? Is if this is like a cup with handle formation and we're breaking from the base, that could be the potential move. I don't think it's going to get there, with ease if that's the case. But hey, don't rule it out, man. Do not rule it out. Now, like I said, the gamma levels are going to be important to watch for. But there's another thing that I look at as far as market conditions go, and that is these 5-day moving averages. I love this visual. Brian Shannon created the. Well, he didn't create this one specifically, but he posted a chart about it. He's been using the 5-day moving average for a long time. I have too, not as long as him. I haven't been trading as long as him, but there's so much things that I learned from his books and his insights. So if you haven't seen his books, Brian Shannon's books, I don't have the names off the top of my head. They're like long titles, but they're very simple and they're actually books where you can actually learn something that will benefit you in the trading realm if you are more specifically a swing trader. And the 5-day moving average from an intraday time frame is something that I always liked. So how do I explain this? So in the 5-day moving average, right? If you just go to the daily time frame and look at the 5-day moving average, it's choppy. They look at it and I look at it from a intraday time frame. So there's about 1,950 minutes, I believe it is, within 5 trading days. So what you do is whatever time frame you're on, you just divide it by that 1950. So for example, How many times does 30 go into 1950 would give you it would equal out your 5-day moving average. So this moving average is not the 5-day moving average on my screen. It's actually the 65 period moving average. And then the visual that he did, I just had it coded myself. It's very simple. Basically, if it shows green, that means the 5-day moving average calculation is trending higher and price is above it. If it's yellow, it means that price action could be either above or below, but the 5-day moving average is diverging from the price. So right here where it was yellow in the Qs, it was actually calculating down still while price action was above. So it was more of a caution and letting us know that if we can hold above, we'll probably turn green. So it's just a very clean looking way, and I just wanted to make it for myself, and I share that in the Discord for those that I did it for Thinkorswim too. I did it for Thinkorswim as well. Pretty sick, huh? Pretty sweet. Do you guys want it? I'll post it if you guys want it. Should I? Should I do that? Should I be nice? It's really simple. I mean, it's not like crazy complicated. But okay, so this, once again, first off, this is not a signal. It's not like a signal to go long. You got to look at the price action. It's just a visual. It's just a visual. Okay. We looked at the month-to-day anchored volume weighted average price. Now we're looking at the swing low anchored volume weighted average price to see what happens from that point. If we get some sort of pullback into this area, I'd be looking to buy the strength from that level. But back to what I was saying. If the market is going to turn a little bit more sour, if it's going to turn sour, I'd be looking to see all this. I'd be looking over here. I'd be going back over, back over, back over, and I'd be looking for the red to turn up, which means price action's below it and it's calculating down. But that is not the case. Can it be tomorrow? Sure, especially depending on what the market sees or doesn't like, what it likes. I don't know. But right now, we're in positive gamma territory. That's typically where volatility is reduced. And the dealers look to buy the dip, sell the rip. And then we're above an inclining 5-day moving average, albeit we're a little extended on some of these products, but we are above it, and that's a positive sign. Okay, cool. Okay, let's go into some individual names. Got a big list here. Okay. Scooby-Doo. Okay, let's go to LLY. We got Eli Lilly. Okay, Eli Lilly. I like how it's setting up. I'm not ready to be a buyer right now. If I was to buy, my stop would be probably just under the 50-day moving average, and I might not get stopped out right on the touch. It depends on what price action looks like at that given time. But I would look to see if it closes below that. Remember, the 20-day, we're below that. It's holding as resistance. We held as support as the 50-day. So for some reason, it's acting technically like sound within this, 50-day. The longer we stay above here, it can start inclining again. So right now, I mean, it's kind of setting up. If you want to be a little bit more, if you want to buy into strength, I'd be looking for the breakout of this little pivot to go retest this probably in a hurry. And then, or you wait even longer to see if we break out of this prior high. So see how price kind of works itself up and then go from there. I get that you'd be getting a better entry price here. That makes sense. So maybe starter positions, but just recognize that if it does break down, like you don't want to hold it down into these areas if it was taking a big old dip into the 200-day. All right. So I do like Eli Lilly. It's been showing strength. The XLV has been showing strength, albeit it does need to digest. XLV saw this kind of big, reversal candle on this day, a huge range candle, huge topping tail. We came in, we bounced back up and so forth. So it's going to be interesting to see just how does price consolidate this recent move in some of these healthcare type names. Let's go to SMCI. SMCI. We got a, we need that mic for TOS. You want me to post it for you? I don't know how to get into this chat. Let me see here. Sign into chat. Beep, 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 beep. Give me a moment. Stick around. I'll try to do that. Why isn't it let me get into chat? Let me see something. Let me go into my YouTube. Oh, that's pretty sick, dude. Okay. Oh, sweet. Okay, give me a second. I'll post. I'm gonna post the Thinkorswim script. Now, give me a second, man. Just give me a second. Let me figure out where it's at. There it is. All right. If you're on Thinkorswim, okay. So do not click the link. If you click the link, it's not going to work, right? So I'm going to post this. There it is. There's the Okay, there's the Thinkorswim thing. You don't click it. You copy the link that I just posted in chat. If you copy the link, you go into your setup. You go open shared item. Then you post it in right here. You hit preview. It's called, I just called it Trend Changer. I don't know if Brian Shannon named it something different. I have no idea. I just called it Trend Changer because that's exactly what it's doing. It's showing the visualization of that. And then you import it. Now, when you import it, it's showing the 130-day moving average. So that is the 5-day moving average on the 15-minute time frame. Now, you can use this on any time frame you want for any moving average. I'm displaying the 5-day moving average from an intraday time frame. So yes, correct. Yeah, do not click the link. It's just copy it and then paste the link into the thing. So you can go into the settings of it and you can change the average right here. You go, I want the 50-day moving average, and you could be on the daily time frame or whatever, right? But right now I'm using the 130 time frame period moving average on the 5-day, on the 15-minute time frame, because that roughly equals, right? What's 1950? We just talked about this, 1950. Divided by the 15 minutes. So how many times is 15 going to 1950? It's 130 times. Boom, even, right? That's the 5-day moving average. Okay. I have it on, what's it called too, but I have on Trend Trading View. So if you want that, I don't know how to get that over to you. I tried doing it myself with my whole Discord, but somebody else had to restructure it to actually work. So I'll have to do that another time, and then I'll post in just the link to, if you guys want to be in the Discord, I'll just post that there too before we go over every other name. Give me a second. What did I just do? Hey, what's up, XEE? DNA is up 16% today. Nice. I love it, dude. I love it. What do I got, man? I was just in the live stream thing. Okay. I started using it about a week ago. Cool stuff, Old Testament. It's pretty cool. Pretty cool too. Pretty cool too. I don't know what I just. Whatever. There, I just pinned that. That's just the trade ideas. The trade ideas thing is the Patreon thing is. I do everything through Patreon, but I post everything in Discord. Patreon, like, the reason why I'm using Patreon, for those that don't know, is Patreon handles all the billing and stuff. I don't even need to touch it, which is pretty cool. They charge kind of an arm and a leg for that, which is kind of lame. But it's just, it manages the entire Discord, like kicks people, adds people, and then so forth. And then I copied the one of the brokerage accounts that I use, which is Interactive Brokers. They've been a supporter of my show for a while, and I use them personally. I use a couple brokerages, and now I just actually entered into, on speaking of Interactive Brokers, Interactive Brokers is bringing me on. I get to be part of it. At least I signed up to be part of it and have the contact now for their new desktop platform that they've been working on. It's pretty cool. It has a lot of development stuff that still needs to take place, but the integrated trading view, it kind of looks like a Webull style. And Webull is a pretty decent platform, honestly, for free. But Interactive Brokers, in my opinion, typically has better executions. And then also with Webull, I liked Webull a lot, but there was one thing that like happened to me during a trade, and it was on a very liquid product. It was on QQQs. I entered into a leveraged position day trading, and I could not exit the position. They would not allow me to exit the position. I had to reach out to support. They kept me in a leveraged position for an intraday trade for 30 minutes. For 30 minutes, I couldn't exit until and they said, oh yeah, there seemed to be a problem or an issue. And this was a scalp that I was looking at. So it held me in for 30 minutes on a position I could not exit out with leverage. And it could have completely and utterly just destroyed. I couldn't put a stop in. I couldn't do anything. It just let me get in, couldn't exit. I lost a decent amount on that trade, but it could have been significantly worse. And the moment I got out was at the moment, and I kept on doing it. I kept on trying to exit. The moment that I got out was at the very low tick. And that's when they allowed me to exit the position. Pissed me off. Didn't really piss me off, but it you account for these type of things, but it did wipe out like 2 weeks of gains, right? On something like that, and it was not my fault. It was just execution fault. You can't have a stop position not register, but let me get into a position. Like the whole thing should have been canceled, and then I couldn't exit the. I'm over that. Okay. I haven't heard anybody else have this problem, but that was enough for me to be like, yeah, no, no. But I didn't really day trade on that platform all too much anyway. But now I have more of a day trading stuff and swing trading on Interactive Brokers, and then I also have my Fidelity accounts that aren't transferring. Those are like SEP IRAs and IRA. Hey, what's up, John? Yeah, Webull's great. Webull is, in my opinion, still good. It was just a situation that really kind of just bugged me, and I haven't seen anybody else run into that. But it happened to me on the desktop, and it didn't let me exit on either desktop or mobile at the time. Weird. Okay, continue on. Let's look at SMCI. SMCI. Yeah, they all have issues, but I have not had an issue quite. Honestly, it wouldn't even have been a big issue if my position wasn't like of size. I wouldn't have cared. But because it was of size, I cared more. Like Fidelity is also like I don't take large positions really. They're more swing trading positions with stops in, but there's been a time where I couldn't log in. That was annoying, but yeah, so that had issues. Robinhood had issues for a lot of people. I know that. Interactive Brokers, I'm sure, has had all kinds of random issues. Yeah, you're going to find it across the board. It's just whatever one pisses you off the most, I guess you walk away from, you know? But yeah, I'm no hate against Webull. I haven't used the platform in quite some time, but I do like their mobile platform to look at the charts every once in a while. Very quick lookup. So I use that pretty much all the time if I'm out and about. I just want a quick look at the chart. I do like that. Okay, let's go on. SMCI. So SMCI, the last time we talked about SMCI was when we were coming into this lower channel. We're seeing a little bit of a bounce here. It's a bounce in an overall downtrend, right? We get boom, 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 and it's in a downtrend. So is this like executable? In my opinion, yeah, weak stocks typically are weaker. So to see it sell off probably is a possibility. If it bounces higher, see where it sets up, but it is declining under the 50-day, declining 50-day moving average, declining 20-day. The 200-day is sloping up, but the longer we stay down here, it's going to start flattening out to turning down, which would be, you know, additional bearish type of stuff there. So I'm not a huge fan of SMCI. Now, you know, where would I potentially be like looking for maybe a buy the dip or something? Maybe if it comes down into this area where we priorly broke out, okay, then maybe see how it shapes up in this area, which would be back to this lower trend. If that's actually the case and we get this little positive divergence again on the RSI, yeah, maybe I'll take a little stab, but it's not going to be a big position. I'm not going to take a big position in a stock that's like doesn't look healthy. Not going to happen. It might, I mean, if it happens, it'd be like more of a very short-term trade, like a day trade sort of thing, where it looks good on a different time frame. But for a swing trade, I like strength, right? And look at MU, right? Look at MU. MU has a positive divergence, right? On the RSI, you have matching lows. You have earnings, though. Pretend earnings is not around the corner. But I mean, this looks like it could be setting up for a little pop, right? And then you could say, oh, it's a double bottom, potentially go higher. But yeah, we're still below declining, below this. So even in this case, and by the way, holy moly, look at this chop, right? We boom, then we came all the way down, and then we came back up, and then we came back down. Now we're back up. That'll chop you to smithereens right there. A lot of times, actually, this kind of action happens before a big move. Just so you know. I don't know if that's going to be a big move to the upside, a big move to the downside, but you typically get some shakeouts and stuff before the move. Very common. But yeah, like, I mean, it looks like it could play for a bounce, but the trend is not great, right? The longer term is good. The 200 days still sloping up, but the longer we stay here, it flattens out. But the 50-day, boom, down. So even a trade like this, it looks like it's setting up. But do I feel comfortable, you know, taking a large position? No, I don't. Not at all, right? I seen people trade Disney, dude. They thought they were like, they kept on averaging into Disney. Like, I liked the setup of Disney too, how it was tightening up here, but it broke down. So get out. Like, even if your stop was here, okay, get out. Right? The 200-day was sloping up, which is positive, okay, but it was below the 50-day, below the 20-day. And it's like, oh, now it's starting to base out again. Oh, see, we're going for it. We're breaking out back, you know, oh, wait, what, okay. So I personally like to see price action get back above these averages, start to see turning back up, right? Start to see it turn back up. It goes up. Oh, it flags back out. Oh, does something like that. And then boom, we start to take off. Versus, you know, the alternative, which is get stuck in a basing pattern. Like I said, I want to make easy money. And the easy money is if something sets up from a short, you know, like this in a, you know, bad trend, okay, maybe the easier money is on a shorter term uptrend. Boom, yay. And you can catch some money, you update your stop. If you get stopped out, okay, you're out. But if I'm doing swing trading, like, it's not easy. This isn't easy money, in my opinion. Easy money would be following the trend. And highs go to higher, lows go to lowers, and so forth. Okay, where was I? LRCX. LRCX is next up on deck. Nike, PayPal, TLT. I got PayPal, I got TLT. We're going to put Nike on the board too. Nike was one that's been on my radar for, I mean, basically since it crashed. Actually, Nike, we're getting closer and closer to potentially having a new CEO in Nike. And as we've seen prior in some other names, seen in some other names like Starbucks, they responded quite well to a CEO change. And Nike has not been doing all too hot. Who's the CEO? Donahue? I think that the market might anticipate that, like, look at that, because I think his contract's up in April, if I remember correctly. I read something. I think the market actually might like that. Maybe. Micron's a good company. Yeah, and it might be. And by the way, when I say like the stock is down, somebody said, you know, Micron's a good company. It might be, but sometimes it could be a great company, but the stock price is just not doing good, right? That happens frequently, right? Hey, thanks for subbing to Prime Exotic. Appreciate you being here, man. Starbucks saying Starbucks got the Tom Brady of CEOs. Yeah, maybe. I haven't looked too much into it. But yeah, I mean, the market likes what it sees. That's for sure. Wasn't it wasn't the prior CEO of Chipotle maybe or something like that, right? If I remember correctly. But yeah, it can be a great company, but the stock price can still go down. I mean, look at Baba. Baba's a good company, right? Baba's a good company. At least if you look at like the fundamentals and stuff. But look at this. I mean, it got completely crashed. And then you can say, oh, it was narrative XYZ. But if you actually do look at the fundamentals, it's still technically a good company. By the way, Baba looks pretty good here. Baba's looking pretty set up. So Baba, this is the weekly time frame. This is the 10-week, the 50-day, right? This is the 30-week, which is roughly the 150-day moving average. And then we have the 40-week, that's roughly the 200-day moving average. Look at, they're starting to actually cross over one another and trend up in the shorter term. Remember, markets move between 4 stages. You got accumulation, markup, distribution, decline. And the way that you can look at these cycles is through the lens of a larger term moving average. And then the shorter term moving averages can move through these same exact cycles like so. Okay? It's fractal in nature. So is this an accumulation phase let's go to the daily. Is this an accumulation phase potentially moving into a stage 2 markup? We'll know the answer in hindsight, but in the current form where it's at right now, extend this to the right, you can see that we are seeing a series of higher lows. We're seeing the shorter term averages start to turn up. If you go back 200 days in BABA, let me go back 200 days, 200 bars, not 200 days. Okay, boom. Okay, what am I trying to say here? Okay. So 11/29 of 223. This is 200 bars ago. So it's the 200-day moving average, this pink line, is being calculated by the closing price as the average of basically all these days, right? All this data. So as time progresses forward, we're going to start losing this data, which is currently below the 200-day moving average, and it's going to start averaging this data and further to future data. So as it's doing this and it's starting to calculate up higher and these days here, all this new data, and we start losing the data that's below the moving average, this is going to start turning up. And as we start turning up, it's telling us that this slow trend here is getting potentially turning a little bit more bullish. Now, it doesn't mean that it can't just crack back down, okay? That's all I'm saying. But that is what happens in the early stages of a markup phase. And now we're seeing, just from a price action perspective, higher lows, and we're starting to kind of get tight here, breaking out potentially. Yeah, maybe we're finally setting up for BABA to actually do something here. So I'm going to take BABA off the list. That was my analysis on BABA. Actually, DIDIY is actually looking good too. DIDIY, I traded it up multiple times, but just like got out basically break even. And then finally I caught the move through $4 and it went up like 20%. And now it's doing kind of this same thing where it's getting pretty tight here. It's kind of clacked under the 200-day moving average below 4. So this one's getting pretty tight. So I'd be looking for, see if it comes through that $4 again. I still think DIDIY, which is a huge company in China, that's why I'm bringing up this name. I feel like they're going to bump this up to the big leagues sometime and not be on the OTC market. I know there was some stuff that happened to make it come to the OTC market, but I feel like there'll probably come a time where this goes back onto a NASDAQ listed exchange or something like that. Maybe, I don't know, speculation. Then we see some, much more volume. Okay, where was it? LRCX? Was that where I was? Sheesh, people. So LRCX, I mean, look at this. This honestly looks like Micron. Literally, legitimately looks just like Micron. There's LRCX and look at Micron. Okay, LRCX. So LRCX, we have this low matching with this low. So I know people are going to say it's a double bottom. It's not actually a double bottom yet until we actually cross through this. So be aware of that. We're seeing a level come down to prior support is what we're seeing. A double bottom would be if price breaks through this area right here, and then you would have a measured move up pretty much basically up to this gap fill. So LRCX right now, it is coming into that 10-for-1 split. Some might look at this as a bear flag. It's below a declining 20-day, below a 50, right? We had a bearish cross or death cross or whatever the case is. And we have this little positive divergence here. So on this day over here, we saw some decent volume. Boom. Now we're seeing some consolidation of that, and we're seeing a little bit of a pop. So if you are trading LRCX, just have a stop under this low or even this little pivot right here and see if we get more of a little pop up. But even if we do get a pop up, I would just okay, where can you potentially run into resistance? Well, maybe the 20-day, but you might say, it's a little short term. Okay, then watch that declining 50-day moving average. You can even potentially anchor a couple anchor volume weighted average prices to this to maybe get a clear, maybe a little bit clearer of a look on LRCX. So if I go to LRCX, let me go LRCX, going this, and I'm like, pull up anchor volume weighted average price. I'm just interested to see at this swing high. There you go. Let me move these averages. Okay. So, we have the matching lows here. We had the positive divergence in the RSI. We had this big volume bar right over here. If I look at this prior swing high, right, we want to break above this, but maybe an early entry could be potentially if we start breaking above this volume weighted average price from the swing high over here. And if we do that, maybe that opens the door for that test of this high. And that would be kind of an ideal, like, okay, maybe that's how I can play this. Or you can anchor a volume weighted average price to this low, and you can say, okay, now between this high and this low of this double bottom pattern, I'm looking for it to break out over here. But if I want to enter in early and speculate maybe a smaller position, I'll enter in now. As we're breaking kind of this little pivot here, I'll enter in now, but my stop is going to be if we close just right under this area, or maybe it's a hard set stop, whatever. So you're entering in early with a smaller position with the hopes that it'll eventually break out. And maybe if it comes up here and sets up, you're like, okay, then I'll add to my position to play for the larger target. I don't know. I'm just trying to walk you through some things that go on in my head, okay? And there's a lot of things, right? As you can see, I'm all over the place. I'm all over the place, people, okay? I'm all over the place. Okay. That's LRCX. We did Eli Lilly. That was Eli Lilly. We did SMCI. We did LRCX. We did BABA. Somebody had asked about Siri. We'll do Uber. Okay, I see Uber up on this list. We got a lot less. We got a lot more coming, people. We got Ubi Scooby, we got Lululemon, the lemon of Lulus. We'll take a look at the markets here in a moment. Actually, I just want to see here. Yeah, still nothing going on there for SPY. Yeah, I'm not interested in day trading. Not at the moment, people. Not at the moment for me. For you, maybe. For me, no. Continue on. I want to just check out on the Twitch chat, make sure I'm not missing anything there. Oh, yeah, see, so you said Milkman, yes. So is Disney, but I get the perspective, yeah. Do I watch my average when adding to the position? Average of XEE. Are you saying like my average price? I do watch my average price. But really, I'll add to it if it makes sense to add to it, right? So I'm not adding into it at a bad time. So if I do get stopped out, I might still take a stop. I might lose on the position, even because I averaged up into it. But I'm okay with that, because if I didn't see the chart at the time, I would have potentially, and it was a new trade, there's probably a high chance I would still take the trade, right? And then I would still potentially get out. So I'm okay with losing as long as my losses are just controlled. But I'm not going to worry too much, because if you build into a position, remember, if you build into a position in the markets, right, you might be up I'm up 10%, but if I average up my position, I'm only up 4%. Yeah, okay, whatever. You're still in profits the same amount, but now you have a bigger position. So if this goes up further, your, larger size position doesn't need to go up much higher to make, a dollar value of greater value. So yeah, if it makes sense to add, I add. If I'm and by the way, if I add, it's not going to be okay, now I'm going to bump it up to full size. I might just add a quarter position into it, right? So if I took a bunch of 2% positions, which I did and I went over earlier on the prior stream before we shut off, I might add another 1%, right? Or maybe I might add another 2%. I'll double that position to 4%, but really my max positions are typically around 6 to 8%. You know what I'm saying? Okay, let's continue on. Siri was on deck. We got Siri, we got Lucid, we got XBI, we got HBAN, KRE. I don't know what OLE is. I think that was a mistype. Palantir, Uber, Lulu, got Coin, TLT, we got Meta, PayPal, Nike, CRM, Redfin. Bunch of other names here. Market net flow right now. We still don't have convergence, so that just tells us that the SPY is not moving with market net flow. And if I'm looking at market net flow very closely, you can see that the cumulative net premiums for calls kind of flattened out. Cumulative net premiums for puts have been kind of climbing here. So that's not the greatest look, and it's above 0 in climbing, and it's gray. So it's not horribly bearish. It's just not trend worthy right now. As far as a key level from a 0-day perspective on SPY, you got 566 above us. Well, 566 is, technically the magnet that's above us. And then 565 is this magnet, or it's not a magnet, it can repel price. So you really want to see price of the SPY back above, which is about 20 cents higher from where it's at. You want to see it back above this 565. So I'll draw a marker there and we can come back. But if I draw a marker right here at 565, it can press price through and repel it higher into that magnet of the red. So 565 is right here. But now that we're below it, right, it can repel price obviously in that opposite direction and push price further away from it. Is how I read this on this software. Okay. So like I'm not gonna like I said, is it a good rate setup for bulls, for bears? I don't think so. I'd rather just, like I said, I just don't want to trade. If it was cleaner, maybe I would do it. All right, let's hop into Siri. We got ASTS. Oh, ASTS is actually on my board right now. And then I'll put up CLEH too as well. I'm gonna try to go through these a little bit quicker. Do I feel there is a difference on extended hours versus regular trading hours on charts? Yeah, I think there's a difference for sure. One, typically you get calculations differently as far as like some averages and stuff like that. But two, I like the cash market session because you don't really have you don't have volume typically in these pre-market sessions or after-market sessions. If there's earnings, that's a different story, but I do look at earnings expected moves. And then if you do like to look at, pre-market sessions, after-market, whatever, sometimes people look at the highs of the, pre-market or the lows and they'll mark them on their charts and they can create trade ideas around from there. And they can do great doing that, right? So it's all preference. It's all preference. For me, primarily a swing trader, executing on smaller time frames most typically, but also I keep an eye on the larger time frames daily and sometimes weekly. I prefer just not even worrying about after hours unless if the volume's there to support me to say, hey, yeah, I got to look at this, which happens. But on a regular day, typically, I don't care, right? So tomorrow, I'll be looking at it, right? Tomorrow, we get a Fed interest rate decision, or I don't know when that's at. When we get the decision. Sorry, this is Wednesday, right? Yeah, Wednesday. I mean, we got building permits as the data. See, I don't really care there. If it was like inflation data, I'd probably care a little bit more. But that'll be happening during the day. Okay, so Siri, I'm gonna move through I want to move through these here. Oh, hey, Giancarlo. So if you go into the he's asking about where I posted it in the announcements channel. So once you get Discord sunk up to Patreon, it's gonna give you access into the Discord group, and then go through the rules, getting started guide, all that stuff, whatever. But in the announcement section, if you scroll up to 9/2 post, September 2nd. I put the trend changer script there. It's in PDF form. So copy it. And before you paste it into TradingView's script thing, bring it over to ChatGPT, right? And say, hey, can you format this properly for TradingView? Because for some reason, like people were like, it's not like it's airing out. And because it's like when you copy it, the way that I did it, it's like it doesn't copy over correctly in the proper format. But if you put it into ChatGPT, it'll do it. But if you don't want to do that, that's fine. And the next post, there was somebody named Jakes in the Discord that if you click the lounge button, it brings you to how he formatted it correctly and posted it there. So you can just copy his post. It'll bring you to that. And then for Thinkorswim, I posted it there. Okay, Siri, I keep on saying I want to go faster. No, you don't need ChatGPT. You can just go to the website. I don't think you need it. I think it's like you can just go there and like type in. You don't need an account, I don't believe. If you do, then... but you don't need to pay for it. I'm almost certain you don't need to pay for it. You just copy, paste, or whatever. But if you're in the Discord, you can, and you don't do the ChatGPT thing. On 9/3 at 3:44 p.m., it says a post from Jake's. You click the lounge button. You click that link there, not the TOS one, but the lounge one. It'll bring you to his post. And then on that same link, Giancarlo, you have there's the TOS link there. You just copy it and post it into the shared settings. So you'll have both of them right there. If you need help doing it, just tag me in the Discord, and I'll show you. Okay, so and thanks for the support, man. Thanks for coming in. For those that don't know, the Discord, I don't charge an arm and a leg. It's not an alert service. Don't come in thinking that it's an alert service. But you got the whole Tradie Tick suite bots there. You got all kinds of cool stuff. And then just a bunch of different of my research, my watch list, my tight list. Every name that I actually went over at the beginning of my stream is from my tight list. Just so you know, every single one of them. So Siri, I'm not interested in Siri at all. Why? Because it's in a bad trend, because it's been selling off. Yeah, there's a positive divergence. Yeah, it's probably going to bounce at some point. But once again, I don't care. I don't care. If I am going to trade it, maybe if it gets back above a 5-day moving average and it starts to turn green, and then maybe if it sets back up. But right now, for something like Siri, I'm just not really looking to jump into something that's in a bad trend that keeps getting beat down and pressed. Over here, I can see that it got traders' attention, probably had some, I mean, this is a high short interest stock, and I would imagine that some traders came in, some gurus, some influencers, and said, now I'm buckling down on, I'm started promoting it probably quite a bit. I bet you I can go through Siri's, the look of Siri, because this is a quick little short squeeze here, and it got faded, fast. So you get a quick squeeze and it fades. So yeah, will we get a squeeze again? Yeah, probably at some point if it starts gaining more attention and so forth. So there's Siri. Lucid. This looks like it could be setting up. Remember we talked about the 4 stages, accumulation, markup, distribution, and decline. This is clearly in the decline phase over here, right? If I go to the weekly time frame, you can see big decline phase. Okay, but are we starting to move through a markup phase right here? An early, very, very early. It hasn't fully started turning up yet, so it might need more time. But if I go to the daily time frame and zoom in here, there's something interesting. What we're starting to see is a series of higher lows. Okay, that's positive. We're getting some supply up here at about 4.3. Okay, the 200-day is still sloping down, so it might need more time. But if I go back 200 bars, it's back to this day. We're going to start taking out this data in the next month or so. And this right here, right, would mean that we're just calculating this data. So as time progresses, if we can hold in these levels, it's going to start flattening out more to turning back up. And that could show us, like, even if it comes out and shakes us out a few times, it could potentially be setting up for more of an uptrend in something like Lucid. It's not there yet. It's still calculating down, but the 50-day is turning up, the 20 days up, and then the 200-day will start flattening out if price can hold up above these levels to turn back up. So as I'm looking at this, if you were trading it, yeah, it does look like it can come retest this level at 4.2. I'd probably have a stop here or a stop here, depending on your risk tolerance and how big the position is. I would definitely look into that. But also, I'd be waiting to see more of that data, remove, and for this to flatten out and turn up. Which brings me, I want to bring up PayPal to kind of show you that people got chopped in and around these levels for quite some time. And then, like I said, while this was happening, while we got these moves, the 200-day was still sloping down. But as more price action traded, it started to turn back up. And this, we talked about it over here, right? This looks like the stages of a potential markup in something like PayPal. And if you go to the weekly time frame, you can very well see, you have your accumulation phase, definitely a markup, distribution, very clear decline, right? There's the 4 stages right there, pretty much to a T, textbook. But if I zoom in more specifically on the weekly time frame, you can see the 10-week is holding, the 30-week is sloping up, which is the original from Stage Analysis by Stan Weinstein. If you haven't seen that book, go read it or listen to the audio. It's a good book. And then you have the 40-week turning up here too. So PayPal, which I did have a position, I don't have a position in right now. I took some off, but I look to re-enter. It is potentially in this early stages of a markup phase. And what would kind of take this away would be if we start declining the 200-day or the 40-week moving average, if price starts breaking back down below these lows. But right now we're showing strength and it's showing some resilience, and it's showing that the trend in the longer term is potentially turning. And that is what you look for from going into stage 1 to stage 2. You want to find these areas where we can go into a markup phase. That's PayPal. I'll remove that from the list. We got XBI. XBI is one that I do an analysis on quite frequently. XBI, I originally was looking at over here. It was a trade idea, right? Price action was getting tight, coiled up, boom, we broke out to retest the supply up here. Then we put in a higher low, we put in another higher low, and now we're back up to testing this pivot area right in and around. I'm gonna draw it out for us, right in and around this 100. And, you know, it's a kind of a zone in here. It's not perfect, but about 10, I was gonna say 102 to 104, 102 to 104, this kind of range in here. So what I would like to see after seeing this bump up is I'd like to see price pull in a little bit and kind of consolidate, and then just go for a breakout. I'm not in a position in XBI. I took ROIV. I was in XBI. I was in XBI when I said I was in XBI, which was a few days ago, or I can't remember when I said it, but if I go to the trend changer tab, XBI was right here, and I was saying either on a stream or, no, it wasn't a stream. It was like right here, I think, where I was like, okay, the trend is changing. It was turning yellow while everything was green. I said now would be probably the time to start to look to enter if it can hold above the month-to-day anchor volume weighted average price. And I think 98 was the level that I was like, you want to see price hold above that level. And so now, you know, I traded. I captured gains. I'm super stoked about that. It was a nice trade. I actually didn't trade XBI. I traded Labu, L-A-B-U. So that's why I'm out of it, is because it was a leveraged position. Not a large leverage position. It was just a leverage product, and leverage products, they have decay, and it's not something that I would recommend. Well, I don't make recommendations, but it's something that I personally wouldn't hold for long periods of time. It's more of a trading vehicle. So XBI now, it is in an uptrend. It's holding these anchored volume weighted average price, which is September, and the swing low. So I would like to see price consolidate and for these to catch up, or price to pull back into and around these levels and show strength. And then I'd probably be looking to establish another position in XBI. So if this breaks out further, I'd still be looking for the consolidation, or I'd be looking for the consolidation here. That's what I would be looking for more specifically. As I'm saying this, SPY is breaking down a little bit here more. Where would be a target for, so back to what we were saying on SPY, 565, it can repel price. Did we get back above 565? Answer, no. What happened? It repelled price down, okay? That's the power of understanding these kind of, these levels here. So 563 started to grow as a magnet. So as price is here, we're about 80 cents away from 563. So if price is gonna continue down, I'd be looking at properties. I'd go to 560. Oh, that was a good tag right there, so by 1 cent. So 563. Now, if price does make its way down here, 563 would be right at around this gap fill for the day. It would be right around the week-to-day anchored volume weighted average price, and it would be a gamma exposure level that traders are focused on. So if price gets down into this area and we start to see strength from it, that right there can be a bounce setup. Now, if that bounce setup, what would I like to see here? I'd like to still see this bullish divergence holding. I get the cumulative net premiums for puts is still growing. This has been flatlining to going down. So be aware of that. If this starts to flatline and this starts to turn up, that'd be a positive sign. But though that right down here, this would be the level now from a zero-day perspective, from a short-term zero-day perspective, from a week-to-day anchored volume weighted average price perspective, and then also you have a confluence of the gap fill. So that level right in these areas. Now, do you just buy it right as soon as it touches it? Some people do. Personally, if I was to do that, it would be a small, tiny little position, because you can cut through it like hot butter. Like, we don't know what's causing this sell-off right here, okay, this push. So I'm watching it, I'm watching. So what would I like to see? Maybe if we go into a smaller time frame, maybe like a 2 mini, right, or a minute, we can see it. And then maybe if we start to see strength from this level, it could be, you know, a bounce setup. So let's see here. Let's go into this 2 minute. Let's take a look. I want to go really quickly to see if anything's changing from a zero date perspective. No, 556.50. And then I want to hop over to my gamma levels over here just to see maybe if we're coming into 56.50, because that would be another level of interest here. And we are coming into that 56.50, which is a zero date level, a gamma level. Here we go. So this would be kind of that area in and around that we can potentially see after a strong authoritative candle, potentially a bounce from. Here we go. We're going into it. So let's see how price, see, we're cutting through it right now. We're just tagging it. Okay. So now let's see how price wants to doodle around. Okay. There we go. We're seeing it in live time. Okay. Bam. All right. So you can let me know if you would take this trade right out of the gate. Or if you'd wait to see if price kind of responds, how it responds in around this area, I'm going to pull up the 1 minute time frame because now we get to see something happen actually live while we're talking about it. I don't have the week to date anchored volume weighted average price, but we do have that gap fill, the week to date, and then this 0 date level here. Okay, so now, and this is a lot of volatility, by the way, people. That's, you're walking in front of a little bit of a steamroller of candles right here. Just be aware of that. But there you go. Let's see how price shapes up, or if it just kind of just V bounces. I'm going to try to get my broker ready, but I'm not going to do it from my computer. I got to do it from my phone because I don't want to pull it up here, just in case if something does set up. Let me get it ready. Maybe I'll start a starter position in there. Maybe do that. A little starter. Okay. All right. So at least we're getting some action here to see. So now you got to see me live, right? Actually see something where I would be interested. Like I said, a little starter position, so nothing crazy. Starter position because we didn't really see the strength. We're seeing some strength now, but okay. So let's re-walk through that because if you didn't take the trade, that's totally fine. And it could completely reverse itself back, but hopefully now you get to see something. What's the word that I'm trying to use? Help me out here, people. Action in a live perspective of looking at the data and saying, oh, okay, something's happening right now. Where are some key levels to pay attention to? And maybe, hopefully, it kept you patient, right? So this entire trading session, I'm like, I'm not looking to trade this. But then all of a sudden, something's happening on my screen. And I'm like, okay, let's take a look at the levels. Let's see if it makes sense. There's some interest at 563. That's in confluence with a week to day anchored volume weighted average price. It's also a gap fill area. These levels can act as potential support for a little short-term bounce. And that's what we're seeing. This is just a short-term bounce. Dude, this thing could collapse right back down. But if you are scalping the markets and trading quickly, especially in like the futures market, right, where things are highly leveraged, and not only a gap fill, but you have the prior areas of, resistance here can potentially turn into support. That right there, and then we looked at market net flow, and then we looked at this bigger gamma strike over here that traders are heavily focused on, and they're not really focused on beneath that. So very quickly, you're utilizing some of the tools you have and saying, okay, this level can become something to trade off of. If we show strength, and then it comes down to how you approach it, right? So if you go into the 1 minute time frame, right? 1 minute time frame. Yeah, see, look at it, it's coming back in. If you go into the 1 minute time frame, you might be like, I want to see a larger move to the upside. I don't want to take a large position, so I want to trade the larger move up. So I think that this level can work into something here. So what I'll do is I'll basically have a stop under the low of this last minute candle or whatever, right? So maybe you're like, I'm gonna, or maybe this swing low over here. Maybe your stop is down here at 56215, and you're saying, I'll take a small position and see if we can just bounce back up, because your assumption is that this is an extended move to the downside. We're hitting into some key levels. Market net flow is really not bearish. It's not bullish, but it's not bearish. It's a bullish divergence, but it's not like completely bullish. And then you're looking at the gamma levels and you're like, they're not really reaching out further. At worst, maybe 5,600, maybe they'll start reaching down here, but we're kind of pinned at 5,650. So yeah, maybe we just bounce from these levels. I want to just take the shot because maybe this is an overextended high ATR candle and we bounce back up a little bit. And maybe that's your setup, right? So your setup is, here's my risk. I'm just doing this in real time, by the way, because I have a starter position on right now. I don't like trading live. I hate trading live. I just can't stand it because I can, these thoughts happen in my head so quick, but to explain them, it takes me forever. And you got to be willing to execute fast. So there you go. Okay. Pretty cool, right? You could set it up however you want to set up the trade, but this would be the risk. That could be potentially the reward, right? Or you can maybe like say, okay, on this like, thrust candle to the downside, maybe I want to just take off half my position here and lock in some profits. If you played into this move, or maybe you played, the retest, and now you start seeing strength from this and you entered right here. So your risk is a little bit more. Yeah. You have to just do what's kind of like good for you, okay? You got to do what works for you. Right now, I'll check my position. Let me go into my app. I took a little position. My little positions are larger than my regular swing trade position, just so you know, intraday. But it is a small position relative for a day trade position, so it is a starter position. Usually my day trades are a little bit heavier volume. Heavier comparatively to my swing trades. Give me a second. Okay. So, I mean, I traded... I can get up to about 1,000 shares, right? I like when I'm looking at the SPY, sometimes I'll trade SPXL. I traded 300 shares, which I know it might sound like a lot, but it's a very short-term hold. And that little bounce produced, $180. So what I'll do is I'll trim it in half because we're about halfway there. So I'm going to go ahead and okay, I'm going to go ahead and cut half of this. And I'm cutting this in half because I can't focus while I do this, dude. I just hate, I should have this up on my other computer and trade it because on the phone, I'm not good at this. All right, I exited out about half of the position. I probably got a bad fill too because this one minute candle. Okay, there. So I captured in profits. Market's still doing its little digestion thing. Maybe if we pull in and move around a little bit, maybe it sets up again. But as it stands right now the position has been, boom, cut in half, locked in some profits. I probably had, like I said, a bad fill because I was very slow on my phone. Yay me. But profit is profit. Yeah. Okay, there we go. Now I want to continue on. So we can come back to that, but I want to continue on because now I do not care as much. Stops are up, everything's good. And if it comes down, it's basically a break-even trade at this point. When do I tighten my stop loss to something less brutal? Well, if this is too brutal, this is like this could be a 1 minute candle down here because look at the range of these 1 minute candles. So it's only brutal if your position sizing is big. You see what I'm saying? So it's not a brutal stop. Like this is not a brutal move if your position sizing is small. So if you want to have a tighter stop, that's totally fine to make it less brutal, but you'll probably stopped out a little bit more frequently. And that's okay. Because when you do get your winners and your position size are big, you just got to make sure that you do get out and you're consistent with your losses. Because when you do have a winner, it'll make up for a lot of those cuts. It'll make up for a lot of them. Okay. And if it bounces up in your favor, you can do what I did and just take off like a partial part of the position. I would have executed so much faster. Unfortunately, I couldn't. But whatever. Right? So I got half of that position on. And now, I can, so this was the risk, but I took off half the position here. So really I can update my stop a bit here if I really wanted to be completely break even, right? Okay, so look, I'm not much of wanting to day trade right now, to be quite frank. So I want to go back into the daily time frames on a lot of these charts. If something happens again, we can pull that back up. Okay. Okay. So there's still questions coming in about that. Oh, okay. No, I answered. Okay. Cool. So there's a question about how to, any suggestion as far as why is holding it longer? The only reason why I'd hold it longer is for the trade to play out, right? Because looking at these gamma levels, maybe it bounces up higher. But I don't want to hold a decent sized position for too long in, it's just not my preference, right? So if I want, okay, so first off, understand where I'm coming from. I'm on a live stream right now. I just had to execute on my cell phone, okay? And I just had because I was too slow, all right? So I would have been a significantly faster trade now to my desktop, but I just don't want to have that right here on the screen, okay? So, because I don't know how it looks on this specific screen without, I don't know, dude, if account numbers show up or whatever. I don't want to deal with that. So yeah, the only reason I'd hold it longer is simply because my position sizing allows for me to hold it longer and play out potentially. That's it. That's why. Like the very short term here doesn't look great. We played a key level, took a little bit of profit, and then you let it go. Okay. I mean, it doesn't look good. Right? It doesn't look good. Right. It's been trending down. Market net flow, the premiums for puts are climbing up. Calls are kind of flatlined. We have that 563 has grown in size over here, and then 565 can still repel price. So let me go back over here and go look at 565. That's the only reason why I'd say, okay, maybe if price can come back up there, I'd be looking to get profits out because it can repel price back down. But there's a big magnet, a big focus over here at this 563. Okay, and 563 is roughly right at around this gamma level that was focused on 0 date, which we can trade around. So look, if traders were reaching out much further down here and this started growing in size significantly, I probably wouldn't hold it as long or hold it up. And then I'm trading on top of that. So I'm on a live stream. So I don't want to have it in the background while I'm trying to talk about other things, what's more important to me is these daily swing trades that I actually hold on for a period of time. I have more positions on. Yeah. Okay. Let's go on. One second, sorry. I'm trying to, there we go. Okay, so we just talked about XBI. So XBI, let's go to HBAN. HBAN is Huntington Bank, a bank, okay. Some of these banks have been looking pretty good, and I mean, financials have been hitting these highs, not too far off an all-time high. And if we're really in this part of the cycle where we have, we're at the top of the economic cycle, this is typically where financials perform better, and that's what we're seeing. We see that in utilities and some other names there too as well that we talked about on last night's brief. Dang it, I just deleted one of my things off my watch list. I think or swim, dude. So when I look at HBAN, what is this? Is this a regional bank, I think, right? A regional bank. I think it's actually in the KRE as one of the higher listed banks. If I go into analyze, no, if I go into market watch, no, let me go to analyze, I'll go to fundamentals. HBAN. Yeah, it's the 11th stock, the 11th top holding in KRE, which is the regional banks. And you can see regional banks, they did break out of this pattern. We've been holding up higher lows, and we're kind of just compressing here once again. Now, would I enter this moment? Nah, maybe not. I would prefer to see more consolidation after this nice little bump up, but we are above that rising 5-day moving average. It's getting up there, right? It's consolidating, boom, consolidating. So I'd prefer to see a little bit more of a consolidation, the 5-day to catch up. And that would probably, benefit HBAN? HBAN. So I go to HBAN, you can see that it is above its 5-day moving average. It's kind of consolidating here around the volume profile. Go to the daily time frame, and it's a pretty similar look. It's a little bit more noisy. But yeah, I'd be looking at maybe around this 15 to 1525 level for a pivot. Maybe if we can come up here, put in a higher low, and then potentially break. And then continue this trend up, right? We have a rising 200-day, rising 50-day, rising 200. Where would a stop be? Maybe probably right under this swing low, and then hope to see it break out and continue and move forward. That's what I would look at. As far as like measured moves go, if you were going to trade this specifically like this level and play the breakout, and this low isn't violated, that would be kind of like the swing low. I would be looking at this as kind of a you know, come on. I would be just a very simple way to do this is just look at a measured move. I mean, it's not perfect by any means, but if you watch that, it can be maybe up to 1755. So if you enter here with the hopes that it's going to break out and you're going to get a full measured move of this kind of base, right, with a stop down here, that would look at, you know, roughly a 15% gain. And if you enter in early, maybe you don't enter full size, but that could be up to 18%, where you're risking, you got to be okay with losing right now, you know, 6.5% or so. So yeah, if you do a starter position, you risk 6.5% and maybe aim up towards north of 18%. Yeah, that's a great risk to reward right there. Even if you get stopped out, if you do this time and time again, there'll be times where you hit it and you only need to be right once, basically out of, what is it, 3, if I did that correctly? Quick math, to be break even. Now we do have earnings around the corner there too as well. By the way, SPY is coming in a little bit. I'm going to just leave this on the screen for a second. I want to get some update on my water while this plays out, and then I want to run to the restroom, and I'll be right back, okay? Give me a second. Alrighty. We are back. No, whoops, not that one. Okay, cool. All right, so we're back. Somebody had mentioned SoFi, so we'll pull SoFi up here in a moment. Okay, SoFi. We did X-Band, we did H-Band, we did XBI, we did KRE. I have no idea what OLE is. I think I mistyped that. So we got Palantir, Uber, Lululemon, Coin, TLT, Meta on deck. We've got Nike, CRM, Redfin, XLC, ASTS, CELH, SoFi as well. Market's coming in still. So this is what I mean. We see a little bounce from this area. Okay, you can play a small position. It got faded. It's still trading around this area. Let's see if anything changed in the meantime. 56.50 under it. Still been seeing consistent growth there in the cumulative net premiums for puts. Anything happen from a zero date perspective? Yeah, a little bit actually. It started to change a little bit. 56.25 is growing in size, and then 5600 started to grow in size. S&P 500 is now down on the trading session. I'm not stopped out yet of the position. I want to actually check in right now where we're at before I get into the other names. I am right now currently down $4. So I had taken profits up here. It's down about $4 right here. So gosh, the position's basically break even as it stands right now. I'll just leave it on. My stop is going to be down here. So if we undercut here, it's just going to be a hard stop, probably about a very small loss. Okay, and then now I want to go into just the daily time frames for the various names that we just mentioned. So let's go to PLTR. Lisa's asking what happened. So what happened? There's cumulative net premiums for calls and puts still growing. For puts, it's been growing. So people are reaching out. We have this 563 is still a pin. You're getting some pretty larger zero date orders in here. The market's just selling off. I mean, this is typical price action as we're leading to an economic event. The market's a little confused. I'm not trying to read too much into this. And this is why I don't really typically trade too much as far as day trading goes on, heading into main events or in market rolls or so forth. But if things do set up, like, I thought this was a pretty decent setup from 563, seeing some volatility, maybe a potential little bounce up. And it was okay. If I would have exited the entire position in hindsight, it would have been great. But the market's trending down right now. This is breaking down, filling the gaps, and coming in. So yeah, it looks like it'll be a stop out here in a moment. I wouldn't be fighting this tape too much, right? I wouldn't bother with it. So Palantir on the daily time frame, I think that this chart looks incredibly good. I'm just not really say like right now would be the greatest entry. I think if you're long, you have the room to breathe. If you play like maybe this flag or even out of this base. This is some pretty big shakeout candles over here on earnings, but Palantir has been holding up rather well. I'd be looking for the consolidations. Okay. So that'd be Palantir. I'd be looking for a consolidation, especially after this big gap up and this kind of follow through. If we can pull in a little bit and have the 20-day catch up a little bit, maybe play it, some strength back up for another pop into and around 40. Okay. Let's go to Uber. Uber looks good right here. Yeah, for sure. This is one that I would probably take an entry with, actually, to be honest. So Uber, we had this gap up probably on news, whatever that news was, and it's still above that rising 200-day, and the 50-day is flattening out and turning up here if we can hold above these levels. So this, to me, looks nice. It's been about 3 days consolidation under this trend line. More specifically, we're kind of like in this pivot area. So if I just draw this line from here and I extend it to the left, you can see that it held as support here. It held as resistance here. It held as resistance. We tried to get above it, but it got rejected. And then we've been held multiple times here too as well. So this level at about 74 seems to be pretty important to the market. So what I would do is I'd drill down into the 5-minute. Okay, would I enter right here? I'd wait to see if the market wants to pull in a little bit and consolidate, but this was a nice little flag consolidation above a rising 5-day moving average. So if we come in and maybe test back into 71, 72 and see some strength from this level and put in a higher low, I'd be looking for maybe something like that to play back up. And then potentially the goal would be to try to trade it up into and around this prior high for the year, and potentially obviously even higher from that standpoint. Now, where would a stop be? In the very short term, if your early entries, maybe under this this little pocket right here, these 3 days of price action, that would be an ideal stop. But if you want to give it more room, I would say just this swing low would make sense. Okay, so there's Uber. Let's pull up. Lulu. So yeah, Lulu could be building some sort of a base here, but it is still in somewhat of a bad trend, right? The overall bigger trend, the 200-day is sloping down, the 50-day is still sloping down, but we are starting to see, you know, price action put in some higher lows, kind of roughly around this pivot area here. So is the sell side, you know, over and done with Lululemon? And I feel like you can get worn out on a name like this, because it's going to take some time for the 50-day to start kind of flattening out to turning back up, for the 20-day to pick up. But we are seeing some tight price action. So if you like trying to enter early for maybe a pop, okay, cool, right? But I would really have these tight stops in place for that, and just be aware that you're still in a pretty bad downtrend, because another person might look at this and say, yeah, we're bouncing up, right? That makes sense. But we are just, you know, in this shorter term, this little up channel, maybe to play it up here. But even that, it could still be a bear flag where we potentially play out lower. So go into the 15-minute time frame on the 5-day moving average, and you start to look at maybe some levels from this perspective, and you have this low, you have this low that's above a rising 5-day. So if it can hold this low over here and pulls back and shows strength from this, maybe perhaps it would be a good idea to play some strength in and around breaking out of this, you know, 269-ish type of level up in this zone here. So boom, maybe it comes in and then sets back up for a nice little pop. That's how I would kind of approach the Lululemon with risk focus, obviously, first. Okay, let's see here. Let's go coin. See ya, Palm Tree Man. Thanks for coming in, man. We do have Redfin on the deck. Yeah, I'll be talking about Redfin in a moment. Yeah, Redfin's coming up. I think I got stopped out of my position, by the way. Yeah, I did get stopped out. Got stopped out right over here. So we're seeing that continued sell side, continued weakness here, perhaps into the 5,600. So the next level would be 5,600 down here, which is a 0-date level at the beginning of the trading session. Let's see, market net flow. I mean, we don't have the convergence. It's still selling off, and the cumulative net premiums have been climbing here. Let's take Gamma look at Gamma Labs, net Gamma. Net Gamma for 0-date. Uh-oh, what's going on? Nothing's really changing from that's some heavy volume though, some heavy big orders on the put side there on 0-date. You can see just the size of those orders, but 563 is still the pin. Let's see if anything changes from a strike perspective. 563 is still the main area. So if I look at this, I mean, 563, we can snap right back up to 563 to be quite honest. So we could set up for another trade here in the moment, in the near term. I would like to see if this has changed at all though. And it's not updating on my end, which is fine. So downside watch would be 5,600. If that is the case, that would be the downside. If we start to see a bounce, it'd be up into 563, which was the original area where we actually bounced from, which is at this current moment kind of the main strike, the magnet to watch for. Other than that, I mean, we're getting some sell side, but I mean, I've seen this happen too many times where you get a lot of sell side, people get fear, and then all of a sudden it snaps back, and then they get all excited. But this is, I think, typical in times of a contract roll, for one, and then two, we're walking into big data. So let's go ahead and look at coin while this kind of plays itself out. The last time I talked about coin was up in this area right here. And the reason why I said I would not be a buyer in this area is because I said if this chart was inverted, I would be, a buyer, right? So if I actually just show you what an inverted chart looks like on Coin, I mean, would you short right here on Coin? Or would you short this chart? In my opinion, no, because price consolidated a recent breakout, and then we saw a nice big move, and now we're consolidating again. So if you look at it upside down, you'd be like, wow, that's a bullish chart. So if you looked at it regularly, sorry, let me bring this up. If you looked at it like a regular chart, you know, why would you be a buyer over here? If you'd be willing to be a buyer if it was inverted, why would you be a buyer when it's regular? And then it sold off, and now it's consolidating again. So yeah, Coin, I'm not a big fan of. Like, it has some work to do, but it's been breaking down. We saw strength to the downside, consolidated, strength to the downside, consolidating. It has to now prove itself, and it could take some time to do that. But yeah, not interested in a position here at all. If you go into smaller time frames, you're like, but maybe I can patch a little bit of a pop. Cool. So where would a smaller time frame be? Okay, maybe you're looking at this swing low, this swing low, this swing low, higher lows. That's positive. We're in the green. The 5-day moving average is turning up. We're starting to pull back in a little bit. Maybe we can see another higher low here. It sets up, and then we start breaking from here, and you're like, okay, now I want to enter for a swing trade to the upside, maybe up to 177, maybe to 180. Okay, cool. Now you're setting it up on this specific time frame, but you also have to be aware that the daily time frame is still bearish. Okay, so that's where you get a little bit, you know, how you can approach it from a different perspective on a different time frame. You can be bearish it, but you can be bullish technically in the same time. So if I were to trade this to the long side, I wouldn't be looking at the daily chart to do that because it's not interest. I'd be looking at the smaller time frames to trade it a quicker trade. Cool, hope that helps. Let's go to TLT. Every time I consider selling my utilities, the market dumps. Utilities have been very strong. I don't know how they're looking today. We'll pull that up, but they're down slightly on the day, 0.2%. Yeah, you can look at whatever time frame you find. You got 200 euros. Where do I invest? Personally, I would use that to just invest in yourself, man. I wouldn't be looking to grow that. You know, I wouldn't be pressing my luck to kind of put it into the markets kind of unknowingly what to do, because it's very easy to lose that. Whereas if you look into something that maybe like a few books to help you out to learn, I think that the payout for if you have 200 euros to invest and you bought a book for, you know, 10 euros or 15 euros, I think you're going to have a bigger return on that book if you understand it, read it, to learn about markets, to learn about structure, to learn about something. Yeah, buy your girl flowers. I think it's going to be a bigger payout than just trying to make money in the markets, because you can lose it very easily. If you want to trade in the markets, I'd say start with a paper account if that's what you're working with. But then take that $200 and just invest a portion of it into yourself, and then go from there. I think that would be the better investment, to be quite honest. And then learn the markets with paper trading. And then eventually you can take maybe 10 euros, right, and start up an account and a swing trading account that does fractional shares. And you can try to actually legitimately trade a $10 mini account with proper position sizing using fractional shares, and see if you can grow. Yeah, you're not going to grow massive wealth out of $10, most likely. But if you can do that consistently and make 2% a month, that's 24% a year, then I would say then you can start adding a little bit of money into that account, a little bit more, but don't change your structure, don't change your style, and eventually grow it over time. I know that's not common for people to say in this space, in the guru space. It's like, YOLO it, whatever. But in my opinion, I feel like that'd be the better investment for 200 euros. Where was I? So so we just talked about Coin. Meta was on deck. We talked about Meta earlier, but I'll just revisit it. I took off some of the profits on Meta, but right now it's just consolidating. This, it doesn't look bad at all right now. So look we have a low, a higher low. It's in green. We've been pulling back right here. We filled this gap, right? It's kind of just consolidating this. It could be flagging out again as the 5-day moving average is pulling up. Maybe if we pull back a little bit more, start to see some strength. Boom, we come to retest that 542. And, this is happening to be right at, all-time highs roughly for Meta. And you can see another series of higher lows. Yeah, prices just consolidating here. So yeah, I mean, this doesn't look bad at all. Meta looks good. I would like to see it just continue to trend up like right here. Maybe see a little bit of strength before entering, and then play the strength with a stop under here to maybe this swing high and higher, if you're looking at the larger time frames. But that's Meta. Meta don't look too snabby here. You just got to be hyper aware that the Fed's going to say something, do something that can obviously bring volatility into the markets. Okay, so Nike. You watched a lecture on some trading psychology, and that was the same advice. Oh, that's interesting here. That's good. I am not a trained psychologist, but it's good to hear that. Well, I don't know if the person that you watched was a trained psychologist, but yeah. So Nike, you do have a little short-term change in trend taking place. It went on a pretty monster tear, so I'd be looking for that consolidation like we've been saying at the daily time frame. Right, we were watching this wedge down here. I was hoping it would go lower. It didn't, at least it didn't yet. We have earnings around the corner, and we had this kind of wedge pattern that we're breaking out of. So is it actionable right here? Depends on your time frame if you're trying to play it up into these areas. I think Nike's a stock that's going back over 100 at some point. When that is, I don't know. We're going to see some more shakeouts. I don't know. In the short term, if you're long, I'd be looking at a stop under this 50-day moving average under the swing low. If you enter back down here or even over here, your stop might be lower and you might be looking to build into the position to play it up higher. But in the shorter term perspective, yeah, my stop would be just down here on an entry, and then I'd be looking for either to up here for kind of a 1-for-1, and then a gap fill for more of like a 2-for-1 risk to reward, or potentially 3. It's just, will we have enough time for it to play out heading into earnings? Last earnings was not a good look for the market, not even the one prior. So perhaps things might start changing around here. Maybe the market's going to be like, okay, now we see the case. It's going to start pricing. Who knows? Maybe a different CEO. Maybe something new. It's going to start pricing in. We'll start to see some more positive action. When we get close to earnings, we can pull up the expected move that the market's pricing in. But I want to be hyper aware that this is all still in a downtrend, right? 200-day declining, 50-day starting to turn up, but it was declining. And then the 20-day, we're still below that and it's declining. So you got to approach it understanding those from that perspective. CRM. Salesforce, not really too interested here either. We had a pretty rough earnings, not this last earnings, but the prior one. And even this one, we gapped up through this pivot area, which looked like it could have been good, but then we reverted on itself. And this big reversal day, we haven't actually taken it yet. So I'd be still looking for a break of this candle to feel a little bit more confident, which would be up here where prior supply was in the first place. So, if it wants to do something like that, maybe it might set up, but as it stands right now, I'm just not really too interested in Salesforce. Unless if I see a much more clear setup, and I just don't see that yet. You can see if I were to draw this line and bring it down to here, I'll remove this one because that was for earnings. You can see it acted as resistance, it acted as support, and then when we finally cracked down, it's been acting as resistance again. So back above 270, maybe I'd be more bullish, but I would like to see another higher low as well. For CRM. Redfin. So Redfin, man, has been showing some incredible strength. First and foremost, do you see how we had a nice little base here kind of form? This is where you get a lot of early good price action. Base, right? The 200-day was flattening out to starting to turn up. The 50-day wasn't fully there yet either. So, it started getting tight, and we saw this breakout back up to here, and we saw some continuation. So if you missed it, you look for consolidations. And right here, you get some pretty wild price action. Okay, so it could be, whipping you out, but it was holding above the 20-day. The 50-day started rising up. The 200-day was starting to turn up too. And then we get this breakout, and now we're starting to see it consolidate. So here, it's bullish. If you manage to catch these moves in the early stages of these breakouts, I would say, yeah, it's a go. I would hold into it, but I would be now more interested in seeing how this kind of consolidates as these moving averages start to try to catch up a little bit more. And even if that means it comes up to 18 or 20, but then takes time to set back up and for these averages to catch back up to it, I would still feel a lot more confident buying that than entering right here and then maybe getting chopped up for a while, something like that. Or even if it went up and then started consolidating, getting caught up in that. But overall, if you manage to trade into that, these were some nice moves there in Redfin. XLC is one of the spiders communication sector, and XLC just put in a new high today. So yeah, it reversed on the high, but it did put in a new high, which is bullish. So yeah, this is looking good. What are some of the top products in here? Let's go into the market. Let's go into the, analyze tab. You got Meta, you got Google, you got AT&T. So those are the top, and then TMUS, which is T-Mobile. So let's take a look at those. So we'll start with TMUS. We just hit new highs there. TMUS we're looking at down here, it consolidated. Very strong move. I'd be looking for consolidations in this type of stuff, right? I'm not ready to enter in. Maybe, if on a little bit of a pullback and you think it's going to pop back up for shorter term, but I'd like to see more of a base build out to feel more confident. AT&T, we talked about way down here. We talked about on this over here. And also brand new high the other day, massive move. Those are some of the top 4 holdings there. Then you have Google. Google has been on a massive move to the downside, but now we're seeing a little bit of a recovery here from some pretty significant sell side. So think about this. You have AT&T and TMUS, right, that look like they can potentially take a little bit of a breather. They need some consolidation. Then you have Google that bounced up. It's right now just a higher low in this current time frame. And this might need to just consolidate, digest, and prove itself. And then you have Meta. Meta would be the stronger one right now of the group, which happens to be, was this a top holding? Meta is the top holding. That makes up for 23%. So if Meta can, hold itself together, right? We're looking at the 15-minute time frame, right? And how it was flagging out. Wait, was it? Sorry, that's XLC. I meant Meta. Meta was looking good. It was flagging out here, but we want to see the strength show up and then have a stop. So it hasn't shown the strength yet, but if we do start moving up here, that makes up for 23% of XLC, and this is where I'd probably focus a little bit more on in the near term because it is above that rising 5-day moving average. It's flagging out. It did go on a monster move here in a few trading days, so it might need to consolidate. But yeah, it's also seeing these higher lows into this prior pivot point here too as well. So it doesn't look all too bad for XLC. I think it just needs to just take a little bit of a breather in the near term. ASTS, a little choppy, and that makes sense because it went on such a move, breaking out of these bases over here. Do I see a trade right now? This thing is volatile. This is heavy beta name. I think I was looking at this breakout here, and I don't know when I was looking at this, actually. I think I was looking at this probably because somebody put it on my radar. But right now, yeah, maybe on a larger scale, maybe, you got this bigger flag pattern coming in. And then if we can show some strength and start breaking back above and have the 20-day start to, reclaim that and start popping back up, maybe that'd be something I'm looking for. But this thing came from $2 to $38, in a very short period of time. And now we're starting to see these large candles, which can potentially mean distribution. Doesn't mean it has to be dead and over, but now you got to really be honed in on that position sizing because it can get wild very quickly. CLH. I'm not interested in CLH. I tried to play a couple of bounces in here, won some, lost some, pretty much break even. But we cracked down through this level, which was the gap fill from way back when. It's a bearish trend. Yeah, we'll probably see a bounce at some point, but this is where I'd say, yeah, I'd be looking at more of a shorter term time frame, maybe the 5-day moving average, 15-minute time frame to see how it consolidates, and you can play potential pops. But I'm just not willing to put my capital at risk right yet until it shows a little bit more strength. And then on top of that, if I was to do it, it's probably the shorter time frames that I'd be trading, not the larger swing trade. And then if I'm thinking about like investing, maybe if you think this company is going to be way better in the future because of X, Y, Z, whatever, then, you approach it like such. Maybe you add in a little bit here, add in a little bit there, with the thought that fundamentally it's going to get better over time, whatever the case is. You know, you just got to think your time frame. I'm talking from the terms of more of a swing trader. And from a swing trader, I like the daily time frame to really be on my side. And if it's not, I have to adjust my position sizing and look at the smaller time frames and then be a little bit more aggressive as far as profit taking stop losses go. So that would be CLH. Let's pick up SoFi. SoFi definitely seeing some strength, pulling back a little bit here. Good, that's healthy to see. I want to see the consolidation. If I go to the daily time frame, I went on a monster tear. So yeah, I wouldn't be interested right now in this current moment. But man, if it's starting to get above this 200-day and starting to turn up, the 20-day starting to turn up, the 50 days starting to gain some momentum here, I don't want it to just be another pop and drop, pop and drop, pop and drop, pop and drop, pop and drop. I would like to see it, you know, consolidate, right? If I look at the weekly time frame, you can see it's getting above these averages, right? Which could be accumulation phase potentially. But you want to see these start to turn up, right? The 30-week needs to get back up here, the 10-week, the 40-week. So I think it still has some time to prove itself, and I don't care if it comes way up here. If it does, then I'd be pretty excited about it, because then I would be looking for those consolidations and for these averages to start turning up and play for a larger move, more specifically, higher up. Right? If I pull up a weekly time frame and look just at more data, let's activate this drawing. We'll draw this out like this. Boom. We'll duplicate it. Duplicate. How do I duplicate this? There we go. Duplicate it. What am I doing? Duplicate. Oh, no. Activate. Okay. Boom, boom. Boom, boom. You can see, come on. In this current moment, bear with me, you can see that we kind of ran into resistance here. Then we ran into resistance here. That's a trend line, right? And now we're right there again. So we have 3 little tags here on this trend line. But we can see that price action, it got very volatile, a little bit less volatile, a little bit less volatile, and price action's contraction. So if we do pull back in, it doesn't mean it's said and done. Just like if we break out, it doesn't mean it's over and done when we go up higher and higher. But it could mean that we potentially come to back test it a little bit and so forth to play for a larger move if we are going to be moving into a markup stage. So if I were to enter right here on a weekly time frame, I'd be like, okay, so what would happen if my stop was way down here? That's minus almost 30%. So am I really willing to risk a full-size position for a stop down here? Maybe if you're like saying, no, just this swing low right here. Okay, that's minus 17, 18 to 20%. Am I really willing to lose a full-size position on 20%? No. So if you're like, maybe I want to build into it. Okay, well then I'd be looking for the consolidations and have a starter position. If it comes in, maybe if it shows strength after pulling up a little bit, you can add a little bit more and so forth, and then go from there. But no way I'm going to hold it down to get potentially stopped out 30% on a full-size position down here, or even 20%. Not going to happen. Never will happen. I don't let a full-size position take that big of a loss. At most, typically, I'll let it lose like 6% to 8%, okay? 6 to 8% on a full-size position. Now, if it's like a starter position, it's just 1%, and it goes down 20%, I mean, do the math. How much, if I have a $100,000 portfolio, right, and I'm risking $1,000, right, and it goes down 30%, 30% of this is how much? $300, okay? Now, what's $300? If I lose $300 on a $100,000 portfolio, what's the percentage point loss on that? I mean, 30 basis points, right? If I'm doing my math correctly. Not much, okay? So then it's like, okay, well, then that's fine, right? So then you give it that space and time. And if it climbs way up here, cool, you just made decent money, right? Not a lot, but you made like $300. And then you can always look to add to the position if it is showing continued strength. All right, there's SoFi. Somebody had mentioned APP. App is pulling into, so here we go. 40-week is trending up, 30-week is trending up, 10-week is trending up, right? Oh, wait, this is XBI. It's not App. What the heck? I was like, what the heck? That doesn't. I was like thinking to myself, I'm like, I thought App broke out. Okay. App on the weekly time frame, new high. Is this a new all-time high? Yeah. Yeah, very strong. Would I be buying it right here? No, absolutely not. I don't care. Probably it will continue this little trend up higher, but I'd be looking for the consolidations. That's all. If you miss the breakout, whatever, they come and they go. But we did see a little nice consolidation. You see higher lows. This has been on one of my lists for quite some time. And then we got a massive breakout. A lot of people would miss this, right? But it was a pretty clean breakout. And if you managed to hold all the way in, cool, congratulations. I'd probably continue to hold it in, but I'd be looking for these consolidations at some point here. And then try to execute like maybe a flag pattern, right? So if it trades in, you measure the move up from here, to whatever the breakout is, maybe up to 150 would be, a potential idea if it starts consolidating up and around this area. But massive strength. And then if I zoom in, what do you notice about the candles? So let's go through this. The first candle off this breakout is the authoritative one. Big volume, right? And it's a big range. Then the range gets a little bit smaller of the candle, a little bit baller, but still authoritative in nature, about the same size. Then the candle gets a little bit smaller, right? A little bit less volume. Okay, the momentum, the authority is slowing down. Up, then a little bit smaller. Okay, a little bit less momentum. And then here you can see the range of this body too as well. It's getting a little bit more tinier. Okay, so what can happen here is you're seeing the authoritativeness of the candles start to slow down a little bit. It doesn't mean we can't go higher, but it might show us, a small little body here in the very near future, which means like indecision. It could be a potential doji candle or, potentially shooting star candle, or maybe just a small little candle like this, a little short candle. And then this might say, okay, now the momentum's slowing. It needs to consolidate. It needs to digest the gain. And that's kind of what we're seeing here right now. We're seeing it very slowly, the authoritativeness of the candles, the emotion, right? High authoritation, heavy greed, right? And you're starting to see that kind of compress a little bit. So I would just be watching that for a digestion in the near time. In this, or right, it compresses more and then explodes back, right? That's always a possibility. I'm just kind of reading for what we see right now. Yeah, if you entered into it, there's no reason to exit unless you're just updating stops or taking some partial profits and looking to add back in. But yeah, I mean, it's pretty strong, right? It's very strong. Nice. Some people have already had the position. Good stuff. So we went over a lot of different tickers. Let's take a look at the markets really quick. I'm getting out of breath, man. I'm going to close this stream up here short. Where are we? Oops, what did I just grabbed it. Oh my gosh, what did I just move? I don't even know what I just moved there. S&P 500. Let me get onto my regular time frames. So we can see this. Oh, these were just a bunch of those levels that I was marking out. I'm just going to delete these right now because it's no longer relevant to me right now. We'll re-talk about the levels. Okay. So today, as it stands right now, what are we doing? Well, we reached up to the daily expected move. Market net flow was fairly bearish for the majority of the day, but what we do notice here, and we noticed early on, was the cumulative net premiums for puts kept on kind of growing, which if you look at the background here, you look at algo flow or even momentum, you can see that this has actually been falling. And, if I pull up the momentum indicator, what it's telling us here, momentum is right down here. Notice how this has been falling here too and then turning red. It's just telling us that the difference between the cumulative net premiums of calls and puts, that is starting to kind of shrink in size. An easy way to kind of explain it, right? There's a little bit more complication to it, but that is what, in theory, we are seeing. You overlay the price of SPY. I'm going to go back to convergence. And you could see that we lost convergence more up here in this area. And convergence just tells you if price of SPY is still moving with market net flow. And we lost that earlier on, and this kept on growing. And this makes sense. Why? We're in a contract roll. We got Fed stuff. We're seeing some sell side activity. It's going to freak people out. But where are we overall? We're down minus 12 basis points right now. We're unchanged on the day, and we can easily come right back up to the week-to-day anchored volume weighted average price. So the big stuff is going to come more tomorrow, right? When the Fed interest rate decision, we have a wide open weekly expected move, 572.43 to the upside, 551.59 to the downside. I'd expect we'd be tagging these in the near future. If you are looking to buy the dip, I would want to hold the gamma flip line, wherever that updates come tomorrow, 55.80, right, is where it's at right now. I'd want to stay above 5,600. Okay, even if we undercut it and then maybe turn back up, I would want to stay above 5,600 in this current moment. And then we can take a look at the, let me bring in my trend changer here. You'd want to see this green still. So even if price like on SPY were to come down to 557.50 currently, that would be the swing low anchored volume weighted average price. And that's kind of in confluence with the 5-day moving average. So I mean, this is a pullback in an uptrend as we're digesting into a report. I don't see anything wrong in this current moment. I think you got to be more on the bullish aspect of things. But the problem is we have a binary event tomorrow. We don't know what Fed Powell is going to do, and that's what can change things quickly for the worse, or even better, even for the better. We got to see what the market wants to do with that information, unfortunately. So that's why we've been talking about what did I do? I posted a bunch of feeler positions out there, right? That's what I did, right? I have about 30% exposure to the markets. I'm not day trading this chop. Well, I did take one trade today. That ended up being break even. You got to watch kind of how we looked at that level in real time. But that's about it. That's all I got for you on today's stream, everybody. We went over a lot of names, a lot of stuff. Hope it helped out, gave you some insight into what it is that I do here at the trading desk. Thank you all for the support and thank you for tuning in. I appreciate it. See you, Darth. See you, Jay Haas. See you, Old Testament. See you, Michael. See you, DG. And see you over there, everybody out there on Twitch as well. XEE. We got It's Isaac. We got Joylin, Palm Tree. Thank you. Milkman. Thank you. FT Trader. Thanks for tuning in. Giancarlo. Thanks for coming in. Thanks for that support coming into the Discord group too. Much appreciated, everybody. Till next time. I'll see y'all later and be careful. Be safe out there. Okay. See you, Trader Jens. Good seeing you out here, by the way, Trader Jens.